Hello, I'm Angeline Ong and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of that Wall Street Open. Coming up, US stocks caution ahead of the Fed minutes and also that JOLTS report later on today. We've also got rate-sensitive stocks in view under pressure from higher US Treasury yields. And watching out for US Apple suppliers for you after TSMC shares fell in Asian trade after that Barclays downgrade of Apple. Now, a very good afternoon to you. I'm Angeline Ong and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, let's have a look quickly at how markets are looking. This is the Wall Street on the IG platform, which mirrors the Dow Jones Industrials, and we are seeing an indicated 0.2% lower open there. Looking at the volatility index for you as well, and it's still very low. However, having said that, it's only the second trading session of the year so far. And although we're seeing signals of fresh losses on Wall Street as yields rise, anything could happen as we haven't had many companies coming up with their updates on how the retail season has been faring. We haven't yet had any huge economic data just yet. The big one coming, of course, this coming Friday. Ahead of that, we've got the minutes of the Fed's December meeting, although no surprises are expected there. Let's cross over now to Josh Fabian from Tasty Live, part of IG Group. Josh, what do you expect to hear? Will the mood music change after that Friday's jobs report?
Well, I think the Friday's jobs report will be interesting. Right now, the market is expecting an interest rate cut come March. So I think that any data that we see come out between now and then is going to be very carefully parsed over. Currently we're expecting, I think it's 163,000 new jobs. So it'll be interesting to see, that number. We had seen a number of downward revisions towards the end of last year. So I'm not only interested in what the report for December looks like, but also if we see some more of that trend of the downward revisions from prior months.
Now, the other thing, Josh, is we saw that huge increase in the NASDAQ in 2023, up more than 40%. The gain was, I believe. Are we likely to see sort of a pause and a pause for breath, really, for tech stocks in 2024, or are we going to see another leg up?
I think that what we saw last year was historic in terms of the move higher. To maintain that type of momentum, I think will be hard pressed. But that's not to say that other stocks within the tech sector don't have potential. We saw 7 stocks really lead the NASDAQ last year. So there's a lot of other companies that could still emerge as leaders for 2024.
And we have to leave it there. Thanks very much, Josh. And we'll check in with you again this coming week. Josh Fabian there from Tasty Live, part of IG Group. Now, whilst the NASDAQ has seen a more than 40% rise in 2023, the S&P 500, not bad either, gained some more than 20% in 2023. But IG's Axel Rudolph has been keeping a close eye on the S&P 500 and seen some changes. Axel, what's caught your eye?
Well, Angeline, the S&P 500 looks really interesting to me from a technical perspective amid the current risk-off sentiment that we've seen since rate cut expectations have been pared back over the last few days. And we can see here on the daily chart that the S&P 500 tried to reach its all-time record high going back to January of 2022, just above the 4,800 mark, and did so at the end of December, but since then has come off and slid through this October to January uptrend line. Now, what is important to look out for is, from a technical perspective, that we remain above the 20th of December low at 4,691, because as long as we do so, that's the last reaction low. This could just be a sideways consolidation phase in a strong uptrend. But if we were to fall through that level at 4,692 or 91 on a daily chart closing basis, we could see a deeper retracement perhaps take us back down again towards the 4,600 area. And that would tie in with the high seen back in July of last year. So interesting times ahead with regards to the S&P 500. And by the way, from a technical perspective, we had an inkling of the current corrective move already at the end of December, because that high there that we made at 4,794 had not been confirmed by a high reading of the relative strength index, and therefore we had a lower high on the relative strength index whilst we made a higher high on the price chart, which is called negative divergence, and quite often does lead to at least a short-term correction against the major trend, which is now what is going on at the moment.
Thanks very much, Axel Rudolph there, IG Senior Market Analyst. Now, checking in on US suppliers to Apple because they could be active. We're keeping an eye on Apple first. Let me update you on that stock because it's all sessions on the IG platform. It is at the moment down some 0.3%, adding to those losses in the previous session, 3.7%. Now, all this, the move coming after that Barclays downgrade of Apple, which pushed TSMC, this is the Taiwanese chip maker, down. Keep an eye on Qualcomm. We're just checking in on that for you because Qualcomm is all sessions. And it is down almost 8%, so deepening those losses there ahead of the cash open. Broadcom, another supplier listed in the US to Apple. This won't move until the cash session opens, but keep an eye out on that as well. Now, just to recap, in the previous session, Apple shares fell to its lowest level in 7 weeks. This is after Barclays downgraded the shares of the world's most valuable company due to concerns that demand for its devices, from the iPhone to the Mac, will stay weak this year. Now, Qualcomm supplies chips to Apple, and I believe it will continue supplying these chips until 2024. And Broadcom supplies the American-made chips to Apple, and this is for the iPhone maker. Micron, of course, makes the sensors for the iPhone's camera. Tesla is another one that we're keeping an eye on because earlier in the session, we had news that showed that whilst Tesla did meet its Q4 targets, the 2023 target as well, Tesla lost its spot as a top EV maker by sales in Q4 to China's BYD. Now, Tesla makes 1.8 million vehicles. This is how many vehicles it produced in 2023. And news coming as well as some Tesla cars have lost their tax credits under new IRA guidelines. And just checking in on some of the all-session stocks that are potentially going to move or already moving on the IG platform. Pfizer, all sessions there. And Pfizer currently moving slightly higher by almost 1%. This is after investors picked up some beaten down stocks of 2023. A similar story for Moderna, which has a very quirky ticker, one of my favorites actually, mRNA. It was higher previously, but it's now down 0.2%. And last but not least, let's check in on Verizon for you because it's another all-session stock. Verizon there rising 2% after KeyBank upgraded the stock to overweight. Now, shares of cryptocurrency and blockchain-related companies are falling in pre-market. Many of the moves coming after quite a turbulent time for some of these crypto companies and also crypto miners. Just checking in on Riot for you, Riot Platforms, to see if there's any move there. Riot Platforms, Riot Blockchain, there we go. That will only start trading during the cash session. It's not all sessions stock. However, we'll be keeping a close eye on this market for you. And just a quick precious metals check ahead of the Fed minutes due later in the session. Gold hitting its lowest level since December 21st. This is as the dollar nears a 2-week high. We've also got silver ahead of the Fed minutes hitting a 3-week low. Now, before we go, a quick look at how the market is looking, and we're now just minutes away from the open. As I mentioned earlier, quite a bit of caution there. Rate-sensitive stocks in view amid higher US Treasury yields, but it must be said that it's a very quiet trading week, the first week of 2024, and the volatility index is still very, very low, trading around the 14.8 mark. That's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @AngelineOng on Twitter and @IGCom. This is IGTV.